If the trade deal falls apart or we just don't see any end to sight, the cyclicals, the multinationals, all that have kind of rallied back from the bottom, I think give back at least most, if not, all of it. But I think where I get some comfort, having looked at kind of what Steph has been saying, is the consumer is still strong. It has not died. Kind of things that we thought in December when the government shut down, you had rates kind of moving too high. They're still out there. Consumer confidence, is not down kind of where it is. Housing is picking up. And I think to your point, Joe, of interest rates, if they move too fast, and I think they should go to 2.93, but you're going to get that, oh my God, it's going to be too expensive to buy a house again. So I think if we go slowly there, the market can take it, but we can't go too fast because you're going to get that pullback.
Nobody cares about the transports and the weakness there. The old sort of Dow theory that tells you, the story that is underlying the market, the Russell.
The rails, the rails are strong, Scott.
Right. It's the airlines that are weak, right?
The rails are strong, and that's, to me, in the transports, that's your best signal of fundamental strength in the economy.
And the airlines did not get that badly hurt in the downturn like the rest of the market did. I mean, United came down probably 10%. Delta's up today, so it's really the Southwest and kind of the others that are doing the fare wars, but they haven't been killed. The railroads are strong. KSU's kind of held up in there. It's actually getting into new highs. So I think that there's part of it that we have to watch for, but I don't think that's the big telltale.
You're sticking to your trough first quarter earnings are as bad as they're going to be, and then you get this pickup, and that's why stocks can get a little momentum back?
Yeah, I mean, and I that's why I look at the economic data, because that's what's going to drive earnings. And you have to look at, obviously, what's going on in the world. And, I mean, it does seem like the world data is actually just sort of kind of stagnant.
It's not great. Let's not kid ourselves here, right?
No, I'm not.
A couple little data points here may be good, and then they're canceled out by ones that are bad.
No, I'm not suggesting it's great by any means. In fact, I think that Europe already is in a recession. Germany is leading the way, for sure. But I do think
Italy,
if you do get China to stabilize and you get that stimulus to really kick in, that will certainly help stabilize Europe for sure, and us as well. And again, I look at our data from today, and that's very encouraging. I mean, look, I think Sarat just said it. The consumer, and I've said it too, 70% of the economy, consumer. Consumers doing just fine. Just fine. Jobs, wages, really okay. Manufacturing is the thing that I had been worried about. So that's why I'm looking at this ISM services and the market PMI data today, and also the global ISMs and that sort of thing. So I think that's going to lead to better earnings, not robust earnings, Scott, but better than flattish in the first quarter, maybe even down 1% in the first quarter. But I think you're going to see maybe 2, 3, 5% growth as a pickup into the back half of this year. And I think the valuations make sense.